Thank you very much, Sri. All right. Well, it's like this little wireless device. I need to reset this thing. So, anyhow, let's get back to it here. So, great to be with all of you today. I'm going to shorten it up a little bit. Daily Bites here. We're going to talk a little bit about what happened over the last couple of days here. Of course, last night we had big earnings from Micron. They not only beat on the revenue side, but also beat on the earnings side in a big way. But on top of that, they did the trifecta and guided much higher for earnings and revenue for the next couple of quarters and for the rest of the year. So it's very impressive. And of course, that move with Micron is very impressive this morning. Could be up close to 20% today after closing slightly under $1,000 yesterday. People were getting rid of the stock because they were worried that the down move yesterday was going to reflect some poor earnings. Of course, that was a false move. And if you bought into that, well, you're going to end up buying the stock back at a much higher price today. There are some other movers as well too to pay attention to, like SanDisk, SNDK, STX, which is Seagate and Western Digital. These are all memory names that have run a lot along with Micron. They pulled back quite a bit over the past couple of days. They might be a good opportunity to jump in on some of these. And there's some other names as well. The equipment companies like Applied Materials, which is up about $40. Lam Research, you can see there on my screen, up about close to 7% this morning. A nice move up there. Also, you want to take a look at ASML. ASM Lithography is another name in that group that could get some pin action as well. So, what other names could do well? I think Intel's going to do well. I think also we heard some positives from the CEO and at the investor day from Qualcomm. Qualcomm raised guidance in a huge way. The stock's up probably close to 10 or 12% this morning, above $220. So that's going to be one to take a look at. We saw good numbers from on the economic front on inflation this morning. We also had, let me bring that up for you here. Durable goods came in not so great, but let's see here. Let me refresh this. So came in at minus 4.5%, but we saw an upgrade on GDP for first quarter. Went from 1.7 expected up to 2.1. That's the final for the first quarter. We saw inline numbers for PCE, which is a personal consumption expenditure. This is a favored measure by the Federal Reserve. They take a look at this on a regular basis to see where inflation really is, not just at the CPI and the PPI, but they take a look at this core number and the regular PCI and PCE number. So the core number came in at 0.3, basically in line with what expectations were at. The year-over-year PCE came in at about 4.1%, also in line. Spending is the one number that I really was interested to take a look at, along with personal income. Income was up strong, up 0.7%, and spending up 0.7% as well too. So what does that lead me to believe? That the consumer is still strong, they're still spending, they're making money, and it's going to be good for the economy for the foreseeable future. Now, obviously, things could roll back in the summertime, but we know that lots of people like to spend money. I was just talking with Leanne, and she made a comment, very interesting comment, saying that, hey, what about this World Cup here in the United States? Is that going to be a positive for the economy? And I said, absolutely, 100%. A lot of these little businesses, small businesses, even large businesses, are going to draft off of this run of countries in the United States. Just here in Boston, we had a lot of the pubs and a lot of bars selling out of beer because the Scottish fans just went crazy and went nuts. So that's the sort of thing you're going to see across the country. Whether it's Kansas City or San Francisco or Los Angeles or Dallas or Chicago or New York or even here in Boston. So it's a good thing going on, and it's be happening probably for the next month, I believe, to the end of July. So let's see. Today we have some earnings coming out from FedEx Freight, which is not FedEx. FedEx came out on Tuesday afternoon. with their earnings, which were not great, but the stock did manage to rally back yesterday. McCormick came out with earnings this morning. Darden also came in with good earnings this morning. I'm not sure about their guidance being as much more in line than people were hoping for. Next week, we're going to have Nike and maybe a couple other names, but it is the end of the second quarter. That will be falling on Tuesday, right? Tuesday's the 30th. And it would be a lot of window dressing going on, a lot of options that are going to be expiring on that day. In fact, there's going to be a lot of options expiring tomorrow. It's a huge inventory of options out there that are going to come off the board after the close on the 23rd. But I'm sorry, the 26th. That's tomorrow, and then the 30th as well too. We have monthly and quarterly options that are going to be closing down on Tuesday. So a lot of stuff going on. It just seems, I get this real feeling here that the market is setting up to pull the rug out from under the bears who thought they probably had an advantage on Monday, Tuesday, and Wednesday. It seems like a rug pull is going to happen. Why do I get that feeling? Well, breadth the last couple of days has not been bad. It's actually been positive the last 2 days. It's as crazy it may seem. The oscillator is still slightly negative on the Nasdaq, positive on the New York Stock Exchange, and as crazy it may seem, with the markets being down close to 1.5% to 3% on the Nasdaq. Of course, on Tuesday, we saw breadth was actually positive, so it means that money has been rotating around. On that particular day, it seemed like money was rotating around from growth stocks to value stocks, and maybe we're going to get that turn right back around into growth stocks again. I do think that many investors and hedge funds and so forth are holding back right now, trying to put more money to work before Tuesday's close of the month and a quarter, and we may see some good money flows coming in Wednesday and Thursday, and then of course Friday next week, July 3rd, the market is closed in observance of the 4th of July holiday. So another 3-day weekend like we had last week. So anyway, it's going to be an interesting couple of days here. Hold tight to what you're doing. Remember, keep a lot of cash, take some profits, keep some puts on just in case. I mean, I had some puts on the other day, which really helped soften the blow of the markets being down on certainly on Tuesday and Wednesday. So, this is what we do on a regular basis. So have a great day. Have a great trading day. I will be back with you guys all on Monday of the 29th. And I appreciate all you guys spending a little bit of time with me. And one more thing. A quick shout out to Andrew Hessinger, who spent a nice, generous amount of time with me and the audience on the webinar yesterday talking about the quant data. And I tell you something, this is a great tool. I mean, you guys have to check this out. Quantdata.us. A little bit later on today, I will have a replay of the webinar for you guys to listen to. It's free. It didn't cost anything to get in to the webinar. It doesn't cost anything to replay it and listen to it. But take a look at Andrew's website over here. He'll give you a free trial for 7 days to check it out. And I think that's plenty of time to make a decision whether you want to get the product or not. It's great. Again, I have it. I picked it up today, and I'm excited to use it when the market opens in about 33 minutes. So have a great weekend. Talk to you guys all next week. Take care. Bye.